Good morning and welcome to another edition of Coffee with Tom and Joanne. I'm Tom Matthews.
And I'm Joanne Taranto. Today we have a great topic to talk about, and that is your financing contingency. Why do we put one into the transaction, and why is it possible to sometimes waive it? So in this market where people are being ultra competitive, we have low supply and high demand. Buyers are looking for ways to be creative and to be more competitive. So I want to start the conversation by saying and putting out a disclaimer that we never recommend right off the bat that anybody waive their contingencies on an offer. And the reason for that is a contingency is put in place to protect the buyer as long as you are acting in good faith. So we don't want to say waiving your financing is the right thing to do because everybody's scenario is different. But there are some things that we can do to look at that may make it advantageous and safer for you to waive the contingency. But the first thing we need to establish is what is the risk you have when waiving your contingency for financing? Tom, why don't you go through that?
So the number one risk, Joanne, is your deposit. So it's common practice in the Greater Boston area that people put 5% of the purchase price up with the purchase and sale. So they typically,
5%.
huh?
At least 5%.
At least 5%. Yeah. So typically people put anywhere between 1,000 to 5,000 with an offer, and then a total of at least 5% with their purchase and sale. So if you're buying a $1 million property, that means you're going to have $50,000 that's sitting in escrow. Now, historically, we would tell people that $50,000 was to ensure the seller that you wouldn't wake up on a gray day feeling gloomed and say, I'm not buying this house anymore. And even though financing wasn't an issue. So that money is there. It is, you can lose it. So, and one of the main things that protects that money is a financing contingency. Right. Historically, anywhere from 15 to 30 business days after you sign a purchase and sale, the bank would say, we've verified all your information. We've done an appraisal. We have qualified you for the mortgage. You can proceed to the closing. And once that contingency is met, you are now in a period where your money again is at risk. So we're in an ultra competitive market. Contingencies allow buyers out of deals. So sellers have been looking for buyer offers that have less contingencies and more assurance that they're going to get to a closing table.
Correct.
So waiving your financial contingency puts you in a position where you are almost equivalent to cash.
Yep.
So Joanne, what's a first strategy that a buyer can do to give them the confidence to want to waive a contingency?
Well, the first, easiest, and most straightforward way to feel comfortable waiving your financing contingency is to have somebody backstop you, as we call. And what that means is maybe you have a parent, an uncle, a sibling that is financially well-to-do, not involved in a real estate transaction at the moment, and that they may be willing to pledge their funds to help you close any gaps. So there are several things that can come up that would affect your financing. The first thing you want to know is when you get pre-approved and you fill out all of that paperwork and the bank does their due diligence, you truly are a good candidate to earn that financing. However, things happen. People lose jobs. You know, if you're in the transaction and you've lost a job, God forbid there's a death or some major change in your life scenario, if you have waived your financing, that deposit is at risk.
Correct.
So we all like to think about that deposit being an earnest money deposit to keep the buyer honest. But what if something tragic happens to the buyer? So we want to think about that scenario as well.
Mm-hmm.
So having a family member or someone you know backstop you financially, somebody who says to you, you know what, buyer, I know how competitive it is, and I have a home equity line on my house for $1 million. And if we need to tap it to get you to the closing table, we can do that and get you to the closing table. Now, when you close on a property, let's say you end up in that scenario and you end up having to pay cash for the property at closing, you then have a window of time where you can finance the house again and make the numbers work. So, and buy it at and finance at purchase rates, which are the most competitive rates available.
Correct.
So it's an important piece of the puzzle because you may just say, I don't want to deal with the financing now. I'm overwhelmed with buying the house and I have a cash backstop. Let the cash backstop move in and then do the financing at your own pace is one scenario. Or just move forward doing the financing as you had intended, and then only falling back on that if something catastrophic happens.
Right. Right. So another scenario, let's say you don't have that cash backstop and you still are considering waiving financing. Typically, Joanne and I say minimum down payment 20%. So if you're watching this video and you're trying to decide, would I be a good candidate to waive my financing contingency? In our opinion, after selling real estate for 19 years, minimum 20% down payment. So if you don't have that 20% threshold, you're not a good candidate. And the reason for that is that the next piece, probably job is stable, everything on your end is perfect. The next piece that is really challenging when you waive financing contingency is the appraisal.
Right.
Because your broker is going to go out and do a comparative market analysis, just like they would do for a seller. And they're going to tell you roughly what range that house should sell in. But ultimately, appraisers come in and they are there to justify the value for the bank. And they may come up with a different value. So say you're buying a property for $800,000 that was listed for $750,000, and the appraiser comes in and says, I don't feel this property should sell for $800,000. I think it should sell for $775,000. You can purchase appraisal gap coverage. A lot of banks have this. It's also, you're just buying primary mortgage insurance. And if you don't want to drastically change your monthly payment, you have to have that larger down payment. So you have room to be able to absorb that primary mortgage insurance so that you can still move forward and close the deal and not compromise your deposit. So that down payment's really, really critical when thinking about risk tolerance with this scenario.
Yes. And so a lot of lenders right now are offering programs where they pre-underwrite your file. And that's another great option. It is basically your financing is completed upfront. So you have to commit to your lender. You have to commit to your lender right away from the get-go. And you don't have the opportunity to shop rates after you purchase a home. But what you do have is you have the ironclad ability to know that they're going to issue the financing.
Right.
So what that is that you would be typically you would get what's called a commitment letter about 2 weeks after a purchase and sale. And that's after the bank appraiser has been out, after the underwriter and processor have gone through your entire file, and then they issue this commitment letter. You can get the commitment letter up front, and it is subject to a purchase and sale and an appraisal on a property. So you still have the risk of the appraisal not coming in at value, but you don't have the risk of any other issues coming up in the process of your approval. So it makes you a very solid buyer. In that scenario, we recommend that you have extra cash reserves in place, because if the appraisal comes in and you need to fill a gap of, like Tom mentioned, an example of 25,000, we want to make sure that you have the available cash to be able to make up the difference if you are put into that position.
If appraisal gap coverage isn't available, right now it is. But if you didn't want to change,
want to buy it,
you don't want to change your loan to value ratio. You want to have that cash available. To do that.
Yeah. So, I mean, I love the idea of doing the underwriting up front. And then in a lot of scenarios, they can do like a same day or a next day approval on your mortgage. So your risk is very low. But there's still risk. And when you're buying real estate and writing offers as a buyer, you can only write offers that are in line with whatever your risk tolerance is.
Correct.
People who are going around and waiving financing with 5% down, unless they have a cash backstop like we initially talked about, I mean, that's really just not a good strategy. It's very high risk, very high risk.
Yeah.
So what we try to do is coach our clients to make offers that, number one, make them comfortable, right? Because this is your purchase, this is your life, your lifestyle. But what we want to do is coach you on what the risk is, and then you decide what your risk tolerance is as far as your financing contingency.
Yeah. No, I think this has been a great topic. Obviously, Joanne and I are very passionate about the finance. We could talk about this topic for hours, but we want to thank you. If you have specific questions about your home purchase needs, feel free to reach out to us. But thank you for watching another edition of Coffee with Tom and Joanne. I'm Tom Matthews.
And I'm Joanne Taranto. Cheers.